right. Hello, everybody, and welcome to another episode of the Billion Dollar Banker podcast. We're excited to have you here today, and we appreciate you taking the time to listen in. As a reminder, we want to let you know we are always looking for guests. So if you or someone you know has an interesting message to share, or you're in a profession where you think you have valuable information and content that would be good for our audience, please feel free to reach out at nicole.perrone@ccm.com, and I'd be happy to take a look and see if it's a great match. So today we have a whole series of things we're going to be talking about today in the mortgage world. And as many of you know, I'm Senior Vice President of Production here at CrossCountry Mortgage, and my role is to help educate and empower loan officers to succeed in this ever-changing market. But it's also to partner with professionals that are looking for products that are going to help them succeed as well. And one of the best products that we have here, I'm going to be talking about in just a moment. But first, I'd like to share some really exciting news. CrossCountry Mortgage just got named the #1 mortgage lender in the country. And that's retail mortgage lender, let me clarify. And we are so excited that we hit that milestone. I just want to say big congratulations to everyone at CrossCountry Mortgage who contributes to making that possible. The loan officers, their operations team, marketers, our leadership team, and most of all, our CEO, who started this company with 6 people over 20 years ago and grew it to the size that it is today. We have this amazing video that I would love to share, and maybe we can clip it in at some point, but it talks about the journey, and there's a way that you can follow us on this journey as well, and we'll be putting out more content on that also. So we're going to move over to this PowerPoint presentation that I've prepared for you guys now that talks all about one of the most amazing products that we have in our suite of products here at CrossCountry Mortgage. It's our CCM Signature Expanded Non-QM product set. And as many of you know, I spent 12 and a half years at one of the nation's largest lenders where I had so much experience in so many types of loans and so many different types of products. And many of them were phenomenal. However, we didn't have this product set. And most of the larger lenders in the country really kind of adhered to standard qualified mortgage guidelines. However, we have this product set for customers that might not fit into that box and need additional opportunities or alternative ways of qualifying for a mortgage. So a lot of the people that I'm working with today and that our team is working with here are financial advisors, accounting firms, and investors. Those are big COIs for us where we can help out in so many different ways with people that are, let's say, in the sports and entertainment industry, people that are self-employed that might have kind of unique or creative financing or different ways that they're kind of structured or changes in their business. There's also people that have a tremendous amount of wealth but no income at all, and we have solutions for people like those as well. So without further ado, we're going to cut into these products. This is our non-qualified mortgage business. If you're a realtor out there and you're listening to this, it's really important information here for you to know and understand too, to help get more qualified buyers into homes. So let's take a look at what we have. First of all, we're going to talk to you about why CrossCountry Mortgage. I told you we're the #1 distributed retail lender in the United States. 1 out of every 44 homes finances a mortgage with CrossCountry, which is amazing. We have local branches all over the country and plenty of people in your local market to help you. And we don't just do non-qualified mortgages. Most of the mortgages that we do are your traditional Fannie Mae, Freddie Mac loans. We also do stated bond programs, FHA loans, VA loans, jumbo loans, bridge loans, construction loans, land loans, and lot loans, which in this market, there's not a lot of homes for sale. If you have clients, I saw a realtor the other day post, "Hey, forget about the house. Like, let's buy the land." You know, they're not making any more land. Like, let's go get that, and then you can figure out what you want to do with it. If you're someone that says, "You know what? I'm done looking around. It's just like exhausting at this point. I'm going to go find a piece of land and build on it," then we should talk and tell you about some of these products. Construction loans, obviously, we said that. The non-qualified loans, which we're going to dig into deep today. Reverse mortgages, which, you know, for our financial advisors, our accounting firms, these are big opportunities for, you know, the preservation of assets and the ability for clients that are of a certain age to tap into the equity of their home for different needs. I heard a story the other day from someone that does reverse mortgages where they spoke about somebody that ended up getting sick as they were moving into their elder years, and they needed to finance the costs of healthcare and expenses that are associated with it, which we know in our country on average can be pretty astronomical on a monthly basis. They ended up taking a reverse mortgage to pay for their healthcare monthly, which again was really expensive, was able to kind of have a better quality of life for those several years before they passed away. And with market and where the prices of homes are going, the value of the home appreciated as that interest was accruing. And ultimately, like, they're not left in a bad position. The family that inherits the home is not. And it's a great product for people that need it. So if you're thinking reverse mortgage, it's something that's a phenomenal product. If you have clients and you have any questions, feel free to reach out to us for those. You got down payment assistance programs. We have our own signature program, which is pretty phenomenal, and we'll talk about that in another episode here. Down payment assistance we spoke about just now, home equity lines, financing for business purposes. We have commercial lending avenues as well for people that are looking to buy and develop, people that are just looking for multifamilies. You name it, on the commercial end, we have avenues for it, and hard money lenders, and the list goes on and on. So if you're a client, you're out there, you're looking for financing, you're not sure where to go, we have 150 investors that we work with here at CrossCountry Mortgage, and we would be absolutely happy to help you out with any answers that you need. So it's not just one product here, one set of guidelines. It's 150 different investors that we work with to help you and get you the best options, and all the options that are out there, actually, which is really critical. So what's a non-QM loan? Many of you may be saying, well, I don't even know what non-QM lending is. Tell me more about this. Well, a non-QM loan allows borrowers with non-traditional income or past credit events to get approved for a mortgage. Even if your client has no W-2s, pay stubs, or tax returns, we have an option. So for example, you could have customers like we talked about before that are asset heavy clients that have no income source at all. You could have people that are just here with an ITIN that don't have a social security number. We have real estate investors that are buying and flipping properties, or that just have a lot of properties that they're financing and they can't go through the traditional route and they just want to qualify in a particular fashion. And then we have clients that have unique income calculations or maybe complex tax situations. So here's a list of some of the signature expanded products that we have here at CrossCountry. We have an asset qualifier program where borrowers can get approved using only their liquid assets. It's huge. Bank statement program where self-employed borrowers can use bank statement deposits only to qualify. We have a foreign national product that allows borrowers living abroad to finance investment properties in the United States. We have a full doc loan, which is a solution for borrowers who don't fit traditional guidelines. And then we have an investor cash flow loan. And by the way, I'll pause right there on the full doc loan. Let's say, for example, right now we have a loan that's in process where the pre-sale on a new construction building, they've only hit 32% of the units that were sold. And this client was having a tremendously difficult time finding financing. We just approved that loan recently at a 75 loan to value. That's a client that's fully documented, great credit, good assets. It's just that the collateral in which they're purchasing in has challenges because it doesn't meet certain investor qualifications. So that's an example of a full doc avenue we can go. Investor cash flow we spoke about. We're going to dig in deep on those. Those are for our investors that are buying properties to rent. We have a 1099 only program where you don't need to show us your full tax return. You could just show us your 1099 statement. So for realtors out there, imagine qualifying for the purchase of a home just showing your 1099 and not having to show everything else that you put on the tax return after that. We just dropped a 1-year P&L product where you don't have to provide any bank statements at all. And it's a solution for business owners to qualify using their professional prepared P&L. So it must be prepared by a CPA and professionally completed, and we will use that for your income. We also have a WVOE product where we can qualify borrowers using only the written verification of employment. No pay stubs, no bank statements are needed, just the written VOE. And then we talked about the ITIN, which is a great product as well. And, here are some of the highlights. We have flexible qualification options for borrowers that don't meet traditional standards. We have alternative income calculations that we can use to help them qualify. Common sense underwriting for credit-worthy borrowers. Exception-friendly underwriting. 35% of our non-QM products have some type of an exception on them. Streamlined documentation options. We have a DSCR loans, which are the investor cash flow loans. DSCR stands for debt service coverage ratio. Shortened seasoning periods on credit events. Interest-only options for 30-year and 40-year terms. Non-warrantable condos and condotels. And I'll just pause there for those of you that are in New York City and those of you that are in the co-op condo space. I call us the Black Knights of the collateral world in Manhattan. We can do things that many people can't get done. And while there's so many different avenues and options and great resources for people out there in that space, you could look at us as the Black Knight that can come in and handle the situations that most people can't handle. And then all programs are allowed to close in LLCs, trusts, or corporations, which is big for our clientele that's looking to purchase in these spaces. So let's jump right into some of the details. So an alternative means to qualify self-employed borrowers using bank statements in lieu of tax returns. We're talking about the bank statement product right now. So we can go to a 90% loan to value. That means you could put down 10%. We could go to a 620 credit score, and we can do terms anywhere between 15 and 40 years, which is incredible. And a 5/6, 7/6, 10/6 arm, and then loan amounts anywhere between 100,000 all the way up to 3 million, and a max debt to income ratio of 50. So we allow self-employed borrowers to take advantage of their tax write-offs and to qualify for a mortgage. And we provide simplified underwriting methods for those borrowers. And we use basically either their 12 months or their 24 months of their business bank account statements to derive an income. So you can see right here, that's how we qualify. And who benefits from this, obviously, is our self-employed customer that has consistent cash flow, but also has deductions that the IRS lets them take. So you're not getting penalized for your deductions. You're able to take them, and you can still qualify for a loan. The next one we have here is our signature expanded asset qualifier loan. This loan goes to a max 90% loan to value with a 620 minimum credit score, same terms, anywhere from 40-year to 15-year. You have all the ARM options, plus interest only on all of these. And then loan amounts from 100 to 3 million again. And then, as you can see, DTI up to 50. And again, don't forget, exceptions are here for these types of deals. So it's not to say that you can't go to 95 on an LTV by exception for a very strong customer. So a program where like this, basically what it allows you to do is the borrower can use their assets instead of their income to qualify for a loan. Makes sense, right? You have a client that has $2 million in the bank and they want to buy $1 million home. Well, they could buy it cash, right? So why not be able to provide some kind of financing or qualification method for a client like that? There's no liquidation of assets necessary other than the funds that are needed for closing. And then eligible assets, including checking, saving, marketable securities, retirement accounts, and get this, cryptocurrency. It has to be with Coinbase. So if you have $1 million with Coinbase, we can use 50% of that $1 million. So 500,000 can be used as the assets that you have here attributed to your qualification. Estates, trusts, CDs, etc. So this is for high net worth borrowers that have a lot of income, or not a lot of income, and a lot of assets. Maybe it's someone that recently sold their business, or maybe it's someone that recently sold a bunch of properties, or retirees, or maybe someone that won the lottery or recently received an inheritance. There's so many different options where sometimes traditional lenders won't feel comfortable utilizing anything like that for an asset situation for income to make you qualify. So this is a great program. It's called our Asset Qualifier. The next one, super popular, calling all investors out there. This is something you want to make sure that you know about. Our CCM Signature Expanded Investor Cash Flow Program goes to a maximum of 85% loan to value with a 620 credit score, loan amounts up to 3 million. And get this, no DTI requirement. That's right. We're not going to take any of your real estate owned, any of your employment or income information. All we care about here is the subject property that you're purchasing, how much that monthly obligation is, and how much the rental income is in comparison. So in this situation, we're going to qualify you based on the rental income on the property. So this is for experienced and mom and pop investors that are interested in long-term financing options. This is an alternative to hard money. So if you're out there and you have a hard money loan and it's on a piece of real estate that is an investment property, you probably want to talk to us about refinancing and getting out of that and obtaining a lower rate. So this is a great alternative. Short-term rentals can be used. AirDNA software will be used to help qualify in those situations. Again, no DTI or personal income consideration here. And there's no minimum debt service coverage ratio if you're at a 70 LTV or lower. So for example, if you're putting down, let's say 60, you're going to be at a 60 LTV. So you're putting down 40% on the purchase. Well, in that instance, we don't have any minimum requirement of what the rental income needs to be for you to qualify. As long as the property's rented and it's an investment property, we can make the numbers work. So investors, if you have questions on that, feel free to reach out. Be happy to talk to you about those loans. They're phenomenal. We also have a CCM Signature Expanded Full Doc loan. This is the one we talked about earlier where there's other aspects of qualifications that are tough. It's not the income though. This customer is fully qualified. They have assets, they have income, they have employment. They could be very strong credit-worthy customers. However, there's other things that are going on. So borrowers who may seek unique property features, like for example, non-warrantable condos or condo-tels, which is a big one that a lot of lenders won't finance a condo-tel, hobby farms, royal homes, over 20-acre properties, or ADUs. This could be for borrowers that had a recent credit event. Maybe their credit, got damaged from something that happened. It's this little blip in time in their lives where they're like, "Oh man, this is really difficult." But all these other components are there. There's a divorce situation, or maybe there's something medical that happened, or some issue in their life. They want to explain to us that they think that they can kind of get around here from a perspective of qualification somewhere else. So if you have a client that's looking to qualify a traditional way, but maybe running into roadblocks, remember the black knight of the collateral business in Manhattan, in the boroughs, if you're buying a condo or co-op that's non-warrantable, or that there's local law 11 issues, whatever the case may be, you want to talk to us because we have an avenue for you. The next one we have here is our CCM Signature Expanded Foreign National Program. This is a program for borrowers living abroad, financing an investment property within the United States. There's no U.S. credit needed for foreign nationals who cannot obtain traditional financing. Qualify. How are we going to qualify? How does it work? We're going to qualify the borrower off the DSCR, that's the debt service coverage ratio, or asset qualifier programs. There's no DTI or personal income that is needed in those scenarios, and foreign liabilities are not verified. Who benefits from this program? Well, non-U.S. citizens looking to invest in the United States in real estate. So as you can see, we go to a 75% loan to value. There's no FICO score required. You can see that in little writing underneath 620. Same terms, up to $3 million, and there's no DTI on this product. The 1099 program, we spoke about realtors, any independent contractors that are out there that are receiving 1099 income. This is a great program for you guys. A program for self-employed borrowers that are getting these 1099s that need a way to qualify before deductions. So it's a streamlined documentation option for you guys. How does it work? Well, the program qualifies the borrower with their 1099 statements, as we talked about. 1 or 2 years can be used to qualify, and we'll take 90% of the gross receipts used to qualify. So we'll use 90% of that 1099 income, and we'll use that as your qualification. As you can see, 10% down, 620 credit score, up to $3 million, and up to a 50% DTI. Real estate agents, tech workers, independent contractors, gig employees, and other clients who receive 1099 income, you want to talk to us about this product if you're looking to purchase or refinance your home. And this one that just dropped recently, this is our Signature Expanded 1-year P&L product. So it's a program for business owners to qualify using professionally prepared 12-month or 24-month profit and loss statement. The program qualifies the borrower based on an average from their third-party verified profit and loss over the 12 or 24-month period. There's going to be a business affirmation letter that will be included. Documentation must be prepared by a CPA, EPA, or CTEC, and it can just come straight from them to you, to us, however we need to get it. We would love to meet your accountant. If you're an accountant out there and you have clients that could use help qualifying from this in this way, this is a great product for them. Next up, we have the VOE program. Pretty self-explanatory. It's a written VOE. Why does it exist? It's for borrowers who may have a hard time or take longer to qualify based on inconsistencies in their income. So how does it work? The program qualifies the borrower just based off of a written, filled out verification of employment. It's filled in by their employer, and they send it to us for qualification purposes. So this offers an alternative approach to income verification, providing a streamlined and reliable method to confirm the borrower's income. Loan amounts on this one go to $2 million. It's a 680 minimum FICO and an 80 LTV, as you can see back there. And then our CCM Signature Expanded ITIN program. This is a great program. I mean, so many of us know people that are in the country today that want to become homeowners that don't yet have Social Security numbers. And this product's for you. So if you're here, if you're in the country and all you have is an ITIN, or if you're a realtor or an accountant, you're working with someone that's in this situation, we would love to talk to them and help them enter into home ownership. The program allows basically people who live and work in the U.S. to qualify for a mortgage just using their individual tax identification number. Seems pretty straightforward to me. If you're here and you're paying taxes and you're putting money in the bank, why wouldn't you be able to purchase a home, right? So this is a great product. It's near and dear to me because I think people deserve to have the right to own a home, especially if they're here legally working in the country, and it just makes sense. So this is a full doc program. We could do it 3 different ways. We could do it full doc to 90% loan to value. That means you're putting 10% down. We can do it bank statement to 85%, or we can do debt service coverage ratio. That's the investor cash flow loan where you're buying an investment property for rent. You do have to own a primary residence. And then, it would make sense if you own a primary that you're going to be buying an investment. But if you don't have a primary today, it's kind of difficult to understand how you could just be buying an investment property. 75% loan to value on those. So you got to be putting down a little bit more money if you're buying that investment property. Some of the other unique property types that we do, we spoke about it a little bit, but manufactured homes. So financing for double wide manufactured homes utilized as primary residences. Eligible on basically the following, full doc, bank statement, asset qualification, all the above can use manufactured homes. Same thing with mixed use properties. So we have financing for buildings that have businesses underneath and maybe have residents up top. And we can use all these programs. The borrower is not required to occupy the property or to be an owner or operator of the business. Up to 30% of the rental income from the non-residential unit can be used to qualify. So, and then obviously the rental income on the residential would be used accordingly. Commonly requested exceptions. This is a big slide here because there are so many different exceptions that we have in the non-QM world. When I'm talking to clients, I tell them all the time, or if I'm talking to an accountant or a CPA, financial advisors, investors, just remember everything that we just went through has exceptions. So no landlord history. You could have a 5 to 10% LTV exception, FICO exceptions, the max loan amount exception. So yes, it says 3 million on most of those slides, but we could go higher. FICO exceptions, declining deposits, hobby farms, mixed use with ADU, self-employed for under 2 years, reserve shortages, deed restrictions, you name it, it's up there. And the reason why we have these exceptions is because we realize everybody has unique situations in their life or circumstances. And when you review things with common sense, right, this isn't just like, hey, anybody can get a loan kind of a thing. This is one of those situations where if it makes sense, if it's a borrower that's worthy of being able to meet our LTV requirements, to meet the basic qualifications, then we have a product for them. And many times we say it's not if we can get it done, it's how are we going to get it done? What one of these exceptions do we need, or which one of these products do we need to utilize in order to get that exception? We have an affinity lending program. It's an easy way for our association to demonstrate to your members, both current and prospective, that you're willing to provide them with benefits that improve one's quality of life and enhances their new membership. So, if you know a company out there that has 250 or more employees, we can offer some kind of a discount with CCM as an affinity lending program. Great way to show your employees that there's something out there that we could give back on. This is just kind of a continuation here where the savings can be applied to purchase and refinance a home. It kind of tells you a little bit more about how we can set up the affinity program. Members have access to dedicated mortgage team and substantial savings that could be up to over $2,000. They would have a landing page through their employer that would link straight to CrossCountry. And then we would do educational seminars, one-on-ones, employee benefit days. anything that you'd like us to set up within your company, we could definitely do it. We'd love to do it and help increase home ownership and education in this space. We have a great buy now, sell later product. We can finance the purchase of a new property, secure a listing on the current property, and help your clients get around the stress of doing a home sale contingency. We know what kind of market we're in right now. It is extremely competitive. Depending on where you are geographically, inventory is very low. There's a lot of demand, a lot of buyers. And if you're a buyer out there in the market today, you just need to know that if you have a home sale contingency or if you have a mortgage with just a pre-approval letter, it's going to be a lot harder to qualify than if you get fully credit approved or if you do a product like this where we can provide you a buy now, sell later product. Now, this isn't a bridge loan. It gives a homeowner with capital a chance to buy before they sell. So your current home must have an LTV of 80% or less. We do an exterior appraisal or drive-by to affirm. Reserves are required for this transaction of 12 to 24 months, depending on the home sale status. And rates are without points, depending on the scenario. So we will finance the purchase of your new property, secure a listing on the current property, and help you get around the stress of having a contingent offer on your home sale. Co-branded marketing collateral. So just to pause right here, this is for our real estate agents. This is for any professional, CPAs, accountants, financial advisors, whoever you are. We have flyers, emails, brochures, presentations, and so much more that we can do from a marketing perspective. We're extremely marketing forward company, and we're very proud to say that. We put a lot of time, effort, and energy into the marketing collateral that we have. As you can see, it's built for our customers. It stands out. Every single product that we have can be co-branded with your information on it, as well as updates on the industry. You name it, it's out there. So if you're looking for some co-branded material, and this sounds like something that you'd be interested in, we'd be more than happy to help you. So we're not going to take Q&A, obviously, but certainly I would love for you to comment below, subscribe. If you want to learn more about the mortgage industry, more about CrossCountry Mortgage, please take a minute to comment, ask any questions that you have. I mean, this is a completely open information place. I'll be sure to reply to you, or one of our members of our team will reply to you and get you any information you need on financing.